We just had this news that China is now planning a cut in VAT for manufacturers, which would amount to around $90 billion. Does that mean that we're going to see a China that will do everything they can to support the slowing economy?
I think they'll do everything they can to give you growth stability. I'm not sure they're going to do everything they're capable of doing to drive growth up a percentage point or so. So it's good that they continue to move in the steady direction towards stimulus on a range of fronts, on the fiscal and the monetary front. But I wouldn't have incredibly bullish expectations about what this is going to do to the economy. I think it's about delivering stability, not a big growth upturn.
Okay, talk to me, John, about the fact that actually now the markets has, convinced themselves that there will be not a trade truce, but actually a trade deal. Will that hold?
I think it will hold because this is basically the president's decision, and the U.S. president wants to make a deal, irrespective of some of these longer-term strategic issues that remain unresolved. From a market standpoint, I think what's interesting is just this talk about tariff rollback in exchange for good behavior on the part of the Chinese, and that's stimulus because the tariffs were tax hikes. If those are rolled back, then I think you might see earnings upgrades starting to come through the market, and that's a newer theme which is just starting to really emerge.
John, what does the sum JPMorgan call? Is it a hard landing in China?
No. No, the Chinese have never wanted to deliver a hard landing, and they've always had the policy tools to avoid that. I think the real debate is about whether they're delivering enough stimulus to give you stability or even more stimulus to give you an upturn. And our view is that this is really about stability, not the upturn.
And again, you go to the policy tools question. Do they have the same quiver of arrows that every other economy and nation has, or is it a different quiver?
They have more quivers, and they're also different quivers. I think they have more quivers in the sense that nominal interest rates are higher in China than they are in other countries. I think they have different quivers in the sense that they have scope to cut taxes and increase the federal budget deficit. And this is a latitude that a lot of other countries don't have because it's a much more closed financial market, and they can sort of deliver forced buying of those additional bonds that are going to be issued. So in that sense, I think they have a lot more degrees of freedom than some other countries.